Market trades choppy after the Nifty hits a fresh all-time high in early trade today. IT stocks see pressure and metal stocks shine today.
India is seeing the best earnings growth among most emerging markets, and any 10 to 15% correction would only be a pause in the rally. That's the word from GQG's Rajiv. Jain tells CNBC-TV18 that GQG didn't participate in the recent Vedanta block, but is bullish on Indian airport assets.
It is domestic earnings growth and not extent of Fed interest rate cut that's powering India's bull run, says Morgan Stanley's Jonathan Garner, and expects India to showcase 20% earnings growth over next 5 years, making it Morgan Stanley's most favored market in Asia, along with Japan.
And Novelis files papers for a listing in the US, with the company looking at a potential valuation of $15 billion. Brokerages remain unenthused as extent of the sale of shares by parent Hindalco and end-user funds remains unclear.
In stock action, ABB rallies 8% on strong Q4 earnings. Union Bank gains 4% as the bank looks to raise up to 3,000 crore rupees, while QIP and C slumps 11% as the company denies being in any last-minute talks with Sony to stitch a merger deal. Hello and welcome. You tuned into Business Lunch. I'm Nisha Podar, and with me as always is Pavitra Parekh. So Pavitra, it's been a choppy day today after opening at record levels, and then it went through a lot. But if you really take a look at the swing, it has been an 80-point swing on Nifty 50, and it's again on the path of recovery at this particular moment. So totally at lunch hour, fueled Nifty 50. And at the moment, if you really take a look at the prices, well, 22,231 levels. Now, remember that Nifty 50 had hit a record level, a record high level at the opening of the session. And it's not too far away from that particular level as of now. Let's take a look at what's really working. It's the metals which have been shining in trade today by the percentage. But on the other hand, remember that it's two banks, which are ICICI Bank as well as SBI, which are really taking care of Nifty 50 in staying afloat on the green zone. Reliance Industries is also having a very good run today and not too far away from their life highs as well. It's about 20-25 odd points. So keep an eye out on that. When we look at the overall picture, Bank Nifty is doing extremely well, better than the key indices, but it's the mid-cap universe which is still tepid in trade. And on the stock specific side, some of the PSU counters like Power Grid, BPCL, Coal India, they are the ones which are under pressure in trade. Advanced decline ratio in the market strength is looking pretty good. Not as robust because mid-caps are really tepid in trade, but not bad looking at the mid-cap picture at the moment. Pavitra.
Not bad at all. I mean, this just looks like a market that wants to go up day after day, right? So that's why there's been a decent recovery from, even from the lows that we saw today, even though it's in a narrow band. What stands out today is really what's going on with the PSU banks. From the lows of the day, there's been a near 2% kind of recovery. SBI, of course, doing the most over there. By the way, SBI this year now is up 20%. So that's the kind of move that you've seen. But there are a lot of smaller banks as well today which are doing well, whether it's a Union, whether it's a Punjab and Sindh, Bank of India, Bank of Baroda. I'm naming a few, but that entire lot is buzzing around. Nisha mentioned the metals pack and Reliance, which are doing very well. There are also these smaller pockets like the real estate stocks. So Puravankara has taken off today. Sobha is doing very well, 7% on both of those. On the downside, it is the OMCs which have put on a lot. So those ones giving up a little bit of that gain. And you have some of the IT majors also which are coming in for a little bit of a cut this afternoon. That's the shape of the market. No complaints really with the Nifty over 22,200 very comfortably. But let's kickstart the show by talking about some of the big movers. We have Hindalco in focus after its arm Novelis has filed for an IPO in the US. Nisha, you've been, speaking to sources on this. Take us through what the valuations could really look like for Novelis in the US.
So, Pavitra, first putting it in context, it's a very big deal for India. For India Inc., for the Indian conglomerates, it's actually a very, very big moment because Aditya Birla Group's not only first company to be listed overseas and plans for that, but remember it would be, once listed, the largest Indian company being listed overseas in the US. Of course, second only to Bharti Airtel's Airtel Africa, which listed in the UK, but this will be the largest. The valuation that I'm hearing, and at the moment it's only expectations, because Hindalco can only expect that kind of value unlocking, and as it kickstarts the roadshows with the investors and looks at the capital market situation, only then they will gauge what is the valuation they get. But the expectation at the moment from Hindalco for the Novelis IPO in terms of equity and market cap would be about $15 billion is what we gather from sources with direct knowledge. Now, what is also going to impact Hindalco directly is that the fundraising plan that Hindalco has after selling some shares of Novelis through the IPO is likely to be about $1 billion is what we gather from sources with direct knowledge. Now, putting it into perspective, the confidential submission in SEC empowers the company to also go out and gauge the market interest and kickstart the IPO process. Of course, a few months will be required for the entire process to go through, but the timing of the launch of the IPO will be dependent on the capital market condition in the US is what I gather from sources with direct knowledge. Now, remember that it's a 100% wholly owned company of Hindalco, Novelis, which was bought way back in 2007, and 100% held. So it will be a minority stake to raise $1 billion is what Hindalco will do. So it will be a secondary sale. No money is going to flow into Novelis, but experts do suggest that it will in any which way, with the parent company seeing this value unlocking and fundraising, could ease the pressures when it comes to their capex requirements. Hindalco didn't comment on this story.
Okay, Nisha, thanks for filling us in with all of the details. That is Hindalco right now, up around 1.5% in trade. But moving on to the next big mover today, that's ABB India. It's surging, and how? It's up almost 10% because the company's fourth quarter earnings came in better than was estimated. We have Vamakshi here with the details. Vamakshi, what looks so good this time around?
Well, yes, revenue was up nearly 14% on a year-on-year basis for ABB India, stood at almost 2,758 odd crores. This is, however, lower than what we were expecting. We were expecting around 3,040 crores worth of revenues to come through. But nevertheless, the company has reported the highest ever Q4 revenues in the last 5 years. Strong growth was seen across segments, barring process automation. And in fact, on an annual basis, revenue stood at a record high. Revenue for the whole year stood at 10,446 odd crores, exceeding the company's own guidance of nearly 10,000 crores. Operational performance for the company was also much better than expected, and this was largely driven by better cost absorption and increased volumes. In fact, gross margins for the entire year stood at 39.4% as compared to the company's guidance of 35 to 37%. In the fourth quarter, EBITDA margins did contract sequentially to 15.1%, and this was largely on expected lines, but nevertheless, the quantum of the decline was much lower than what we were expecting. Net profit also witnessed an uptick of almost 11%. This is higher than our poll of almost 300 crores, and the return on capital employed, that is the ROCE, has doubled from 2019 levels to reach 21%, which is the new all-time high ROCE. Lastly, the order inflows were also quite strong. Record high orders were recorded in the year gone by, standing at 12,319 crores, and this was largely led by strong contribution from large orders. Order backlog also saw an uptick of almost 30% on a year-on-year basis, standing at around 8,400 odd crores, and this in turn provides strong revenue visibility for the company. So overall, the company reported very strong order inflows. Operational performance was better than expected, and on the back of that, we're seeing a sharp uptick on ABB India.
All right, Vamakshi, thanks so much for all the important details. The stock is up 9%, and in fact, we'll also get chatting with the management of ABB on their quarterly numbers at 2:35 p.m. today. So do stay tuned for that conversation only on CNBC-TV18. Now it's time for a short breather on Business Lunch. But before that, remember, market is firmly in focus this Wednesday morning, as we are really seeing some volatility play out. So India has not yet seen its true global appeal. That is the word coming in from Morgan Stanley's Chief Asia and Emerging Markets Equity Strategist, who's Jonathan Garner. And he also adds that earnings fundamental is driving growth in the Indian as well as the Japanese markets. Listen in to a slice of this exclusive conversation, and we'll be back from the break on Business Lunch.
We're in what we call a new era for Asia and EM equities, led by India and Japan. So they are in strong secular bull markets. And what the two markets that we most favor in Asia have in common is strong nominal GDP growth and strong earnings growth. So if you look at the most recent quarter in India, for our stocks under coverage, earnings are growing around 23%. Year on year. For Japan, we actually just this morning published an earnings season update, and earnings are growing around 20% year on year. So there are very strong earnings fundamentals that are driving these bull markets. India's share in the EM index, or the Asia ex-Japan index, is rising steadily. It's certainly true that you are not at this point yet seeing the very large inflows that you would get to Japan, where you get household name stocks that global investors have got to know and over the years and are now coming back to. That does lie ahead for India. That true global appeal I would agree, has not yet taken place. We really do think that 20% compound EPS growth is going to be sustainable for India on, let's say, a 3 to 5 year horizon. You're in a virtuous cycle in India of strong nominal GDP growth, strong capital inflows, corporate profits that I already mentioned, in the context of much more stable interest rates and exchange rates than we've ever seen before in India. And all of this is a consequence of a persistent macro reform agenda that has really produced a much greater degree of macro balance in India.
Hey guys, welcome back. You're still tuned into Business Lunch, and let's now bring you a big CNBC-TV18 exclusive. Rajiv Jain of GQG Partners is one of the largest foreign investors in India, and in an exclusive conversation with my colleague Prashant, he explains his thought process on PSU companies and stocks. Remember, GQG holds meaningful stakes in both NTPC and SBI. So take a look at what he had to say.
PSUs are the other space, Rajiv, which have done phenomenally well, right? That's another area where there has been a sea change as far as perception is concerned. You own large names like SBI and NTPC. Have you looked at others in any areas where you think, which you think will do very well? I know for a fact that you think there's this, oil and energy markets are in for a structural bull market. A lot of exposure in the PSU space there in that area, and stocks have done well. Your thoughts, Rajiv?
So we looked at the oil names, and if they were more liquid, larger liquid, probably would have bought them because for the last 2.5, 3 years, we've been very positive on a lot of PSUs. I mean, include State Bank of India, NTPC, Power Grid, and we own in some small and large way. I think some of these are basically look at our size and scale. We can't execute because sometimes blocks are not available. By the way, LIC is the same one. We would have loved to buy that. We couldn't find any blocks last year, early last year. So I think some of these are just hard to execute from our vantage point because we like to run very constant book. But I think one thing which is, and these were not simply cheap. What we saw was just much more tighter management. I mean, if you look at NTPC, we quite like how the current management has done a much better job versus historically. So there's this sense of urgency you're seeing in a bunch of these, and I think they're also getting a lot less intervention from Delhi, which was a chronic problem historically, right? So in last 10 years, the intervention has gone down dramatically. In fact, they pushed to hire some very competent people, a lot of these companies. So I think long term we like these, but obviously today a lot of them are done well. We still like them, but our problem sometimes is that we like to run constant portfolio and just hard to execute because those blocks are hard to find. But otherwise, I think, and as you know, these things are very under-owned by vast majority of foreign investors too, because there's this perception there that state-owned companies are always bad. Nothing is always bad, and nothing is always good for that matter.
You can catch the snippets of this conversation all through the day and the full show at 5:30 p.m. this evening only on CNBC-TV18. And with that, it's time for a short breather on Business Lunch. But when we return, remember heavy security deployment as farmers march towards the national capital. More details on that when we return. Welcome back. You're watching Business Lunch. In the last few minutes of trade, Nifty 50 has lost some ground. It is absolutely flat at the moment and losing that momentum. So just keep an eye out on that. A lot of it is led by the banking space and some of the heavyweights over there. Keep an eye out for SBI as well as HDFC Bank. Let's now focus on the latest update coming in on some national developments today. The farmers' protest as farmers from multiple states gear up to continue the Delhi Chalo March. Heavy security has been deployed at various entry points to the national capital. Now, tensions continue to mount at the Shambhu border in Haryana as the police fire tear gas shells on the farmers preparing to resume their march. In fact, Anshul Singh of CNN News 18 is joining us with the latest ground report. Anshul.
The protesting farmers had given a call to march towards the national capital on 21st of January, that is today. And that is the reason why the entire national capital was in fact fortified, which meant that moving in and out of the national capital became a very, very big headache for the commuters and also people who were traveling. But to some relief to the government, the farmers have finally now agreed to hold another round of meetings with the national government, and this meeting will happen today evening. This is the fifth round of meeting that has been called for, and it remains to be seen if at all some sort of midway can be found by the government so that the farmers could finally call off their strike. At this point in time, the entire impasse is now stuck at the Shambhu border, which connects Punjab to Haryana. Thousands of farmers have already gathered over here, thousands of trolleys have already gathered over there, and along with that, heavy machineries have also been brought in to go ahead and tackle with the police, because remember, the police had made sure that the entire area in and around the national capital is absolutely fortified. Now, what remains to be seen over the next few hours, if at all the government will finally be able to convince the farmers to find a midway, and post that, if at all we can expect that some sort of relief could be given to the common man who is suffering from this traffic impasse that is happening because of the barricading that has been done by the police official on each and every border of the national capital.
All right, Anshul, thanks a lot for getting us all of the details on the latest as far as the farmers' protest in Delhi goes. But as we wrap up on this edition of Business Lunch, we get you some somber news now. Eminent jurist Fali Nariman, who served as India's additional Solicitor General from 1972 to 1975, passed away this morning at the age of 95. Nariman, who has been awarded the Padma Bhushan and the Padma Vibhushan, has argued in landmark cases like the Kesvananda Bharati case, the Minerva Mills case, which helped enshrine legal doctrines. Prime Minister Narendra Modi and Chief Justice D.Y. Chandrachud condole the death of Mr. Nariman.
All right, and another sad news today, the grand old man of Indian radio, Amin Saini, the iconic voice of Geet Mala, remember, on the All India Radio, passed away at the age of 91. Over a career spanning 6 decades, he produced and presented over 54,000 radio programs and lent his voice to 19,000 advertisements and jingles. We all have grown up hearing him so many times, and so many memories attached to that. All right, with that, it's a wrap on this edition of Business Lunch. Quite on a somber note, Pavitra, but it's time to say goodbye.